Hello, hello, and welcome. Welcome back to our new version of Happy Time, Happy Money podcast. Today, we are going to have a little longer interview, and this is the shift that we made in New Year's. So, welcome our first guest in this awesome long interview with Tyler Bossetti. And Tyler is a co-founder of 0% and real estate developer. Tyler educates people in how to gain access to zero and low interest capital to eliminate high interest bad debt, scale their business, build passive income streams, and make investments into crypto and real estate. Wow, there is so much going on here, but we will get into each thing later. Hi, and welcome, Tyler.
Hey there. Thank you so much, Viktoriia, for having me, and excited to be the first guest on a longer show here.
Absolutely. So as always, it's never changing for long or short fun versions. We still would love to know more about you. How did you start it on what inspired you? Like, just give us your story.
Yeah, absolutely. So hopefully I will not be long-winded with this, and I'll get, straight to the main points as far as a little bit about me, why I do what I do, and ultimately inspire others to do what they wish to do. So originally grew up in a really small town named Mechanicsburg, Ohio, literally 1,000 people in that town. And, just a typical small rural town here in Ohio. I lost my father when I was 8 years old to, a pretty tragic house fire. So that really kind of, was immediate adversity in my life, and really what kind of initially sparked my drive and my really overall like mentality that I have now when it comes to like work ethic, finances, the power of money, the power of investments. And I found a lot of growth through that, right? Through that process, losing a father at a young age and not really having like much mentorship or guidance growing up. I found that guidance, and I found that also additional discipline through running. I fell in love with running in the middle of my high school career. I started running cross country and track, and it was really like the you versus you mentality, right? Like there's not those excuses that you can make if you are in sports or you enjoy sports where your teammate didn't pass you the ball, or your coach did something wrong. Like in running, it's pretty simple, right? Like you train hard, you run faster, you get better, or you don't, right? So in high school, I was very driven around like my sophomore, junior year. Really started loving running, and my intention was to go to a Division I school and run and compete. And I ended up attending a small college, Wright State University in Dayton, Ohio. And I was going to walk onto the running team, but realized that I had to work during college and cover my expenses. And literally, like the first weekend I was there, I realized, okay, this is not for me. I want like the college experience, being able to like party, hang out with friends. I'm very extroverted. Also, I think we're all introverted and extroverted, but to make a long story short, I just realized immediately this is not the right environment for me to really be fulfilled and reach my potential, if you will. So I transferred to Ohio State University after 1 year, which was always my dream, right? Growing up in a small town, a rural town, not really motivating, if you will, right? So I went from literally like this tiny little town to the biggest university. And I wouldn't say there was like a shock, but there definitely was like inspiration, right? Like going into the campus and these classrooms with hundreds of people, and met some great people, right? Met some great college friends. And during that time, I was working full time, going to college full time, and came across this awesome opportunity of the mortgage industry, where I was really just doing like a very entry level sales job, and I had about 3/4 of my college completed. So I was literally like half a year or a year based on classes that I would be taking to be finished with college. And with this opportunity in the mortgage industry, I decided to drop out, pursue a career in the mortgage industry. I felt like it was the ultimate right decision for me. I was never like the student type person, right? Like I always dreaded school, and I worked hard and got, pretty decent grades, but I spent 5 years in the mortgage industry, learned a lot, was involved in over 4,000 real estate transactions. And that's when I started to really learn the power of finance, the power of credit, the power of building relationships in a business, and really put in a lot of work to then take another calculated risk and partnering up with my business partner, Jeff, we co-founded our company 0%, which, like you mentioned, we help people acquire 0% in low interest capital and leverage their personal and business credit to, start a business or eliminate high interest debt. 80% of people are paycheck to paycheck because of high interest debt. So if we're able to help them eliminate that bad debt or use other people's money to finally start that business, to grow their income and make investments, then they can become financially independent, right? We can put systems and processes in place for them to consistently earn passive income, like true passive income, right? Where you can do what you want with your time. Growing up in a rural town with not many, driven people, if you will, not many people that valued money or valued investments, it really opened my eyes, putting in the real work, right? Putting in the work of running ultra marathons, working full time during college, making sacrifices to, still have fun. But instead of partying every weekend, I was putting in the other work, right? I was trying to put myself in the best position possible and create that adversity to learn and grow, right? And I truly believe that if your finances are in order, you understand how to make money, you know how to invest money, then you can do what you wish with your time, right? And you can spend your time with the people that you actually love and that you actually care about. And, money can solve a lot of problems if you do the right thing with it. So, to this date here and the recording of end of November 2021, again, we have our consulting company through digital products and services and webinars. And we have our two hedge funds, our crypto hedge fund and our real estate fund. I'm sitting here at WeWork in Columbus, Ohio, and this is where we have our real estate development company, where we're consistently acquiring deals. And then we, again, have our hedge fund and our main headquarters of the office down in Miami, Florida. We have about 60 employees now, and we're looking to literally double the size of the company in the next 12 months. And yeah, I'm just super grateful. I truly believe in getting around the right people and consistently growing each and every single day. It's not a matter of when adversity is going to hit. It's a matter of when it's going to hit. So really just, doing what I can to consistently grow my mindset, always work on my body, work on the business, work on my spirituality, and do what I can to help others live the life that they want to live. So that's a little bit about me, Viktoriia.
I love it. I love it. And, it's like I got just question hit when you were sharing that you consistently working and, you love to be around people. And I think that's one of the most important things is to really have that support and allies. But what do you think is like top 3 characteristic that you adapted to create that lifestyle in the business and the life that you love?
Yeah, that's a phenomenal question. I think number one is work ethic. Like, there's going to be times where you have to put in 16 hours. There has to be times where you may only need to put in 60 minutes, but each and every single day, there's going to have to be some type of work that needs to be done, whether that's like actual work on your business or actual spirituality work or mindset work or, working on your body, going to the gym. But I think number one is work ethic. And thankfully, growing up with, my father passing away, it really shocks people when I say this, but it's one of the greatest things that ever happened to me because I saw my mom work 2 to 3 jobs. And the second piece is self-awareness, right? So yes, you can work a lot. Yes, you can put in all the hours that you possibly want. But the second piece, in my opinion, is self-awareness, right? Self-awareness enough to know that, hey, I need to drop out of college to go pursue the mortgage industry because not only was I making money, not only was I one of the fastest growing loan officers in the country, but I was self-aware enough to know that I was betting on myself, right? Hey, worst case scenario, I'll just go back to college, right? I'm self-aware enough that I don't need to run every decision by everyone else. I know in my gut that this is the right decision for me. And, last but not least, I think is empathy, right? Like I thankfully am in a spot where because of work ethic, because of self-awareness, because of doing the day in and day out work each and every single day, I'm in a spot where I don't have to hypothetically work ever again, right? My passive income and my investments and things that I've done over the last decade, quote unquote, set for life, right? But I'm empathetic enough to know that people are counting on me, right? And I'm counting on myself. I'm counting on myself to show up for our team, show up for our clients, and inspire others because I know what it's like to not really come from anything, if you will, But I also know that even if you come from everything, it doesn't matter, right? Like at the end of the day, yes, money solves a lot of problems. And I think that people should have their like most problems actually arise, in my opinion, from finances, from a lack of financial illiteracy. So I'm empathetic enough to know that yes, that can solve problems, but there's also this other side of work that needs to be done on yourself and on your spirituality and doing the right thing. So I think those are the three things when it comes to characteristics: is a work ethic, self-awareness, and being empathetic.
I love it because I've run into the statistic where they will compare successful CEOs with people that are not at those levels, and one of it, like you mentioned, there was empathy. It's just a high emotional intelligence and self-awareness around, okay, how am I doing things? Am I going to the right direction, or where do I need to shift? Where do I need to get a feedback and pivot? Absolutely.
Totally.
Let's go into real estate. So tell us more, like, how do you start? Let's say, like, I don't know much about it. Like, where do I go?
Yeah, absolutely. So first and foremost, a lot of people know this already, but the most amount of millionaires have been made through real estate, and it's understanding, how and why, right? Like
The crypto
how do you
didn't overcome that now. There's a crypto not the first one. Is it
yeah.
before real estate is a crypto now? Probably start to like a scale a little out back.
Oh yeah, yeah. I'm sure we'll get into the topic of crypto. I think that the biggest opportunity
Yeah.
in our lifetime is definitely cryptocurrency. But history has shown for the last thousands, if not hundreds of thousands of years, that human beings have been alive and measuring wealth. Like history books, and if you're religious, religious writings basically show people's wealth, if you will. It's measured through property. It's measured through land and real estate. So number one, it's saying, hey, I'm self-aware enough to know that I don't need to be necessarily a real estate expert. It should hypothetically be a part of my portfolio in some nature. It doesn't have to be the main piece of your portfolio or the main piece of your investments or where you spend your time, your energy, your money. But number one, it's okay, history has shown that. And why is that? And how do I get started? Number one, how do you get started? Really simple, right? Number one is you can actively do it yourself, like I am, where I've put in a decade of work of, making connections, networking with realtors, with lenders, with other investors, watching podcasts, listening to YouTube videos, right? And actually going to take action on it. Or you can passively do it where, to be very honest and blunt with people, most people should actually passively do it. They should be spending their time, number one, on their business in order to grow their income, right? Or if they have a great job already, how can I consistently grow my income through podcasts, through content, through making that extra sales call? What is your highest income producing activity? You don't necessarily need to be the absolute expert when it comes to actively doing anything, right? So if you know that and you're self-aware enough to know, hey, yes, I could go make more money if I go deployed my time and energy into actively doing it, but you're also leaving a huge opportunity cost by not just focusing and growing and deploying all of your energy and money into your business so you grow your income. When you grow your income, then you can make investments. So number one is, hey, let's do it ourselves and put in the work, or we don't have to, and I can lend money to, let's say, Tyler or somebody else that to earn passive income or to get equity in a deal, and you literally own real estate with them. And why is real estate, in my opinion, the best overall long-term investment? Number one is cash flow, right? Like it actually produces monthly net cash flow. Number two is you can use other people's money and other people's time. So if I'm actively doing it, I can go raise money and 100% finance deals, or you can go use 0% capital and use that to passively invest with somebody, right? The third reason, arguably the most powerful, and this is where that argument of crypto and real estate really comes into play, in my opinion, is the tax advantages, right? Taxes are the biggest expense people will ever have in their lifetime, especially in the United States. So how can we leverage our business and crypto and other assets that will exponentially grow, but then take those profits and roll it into a real estate deal? And we have a huge tax savings because of that, right? Whether that's through what's called like an opportunity zone fund, where there's tax advantages, or whether that's through depreciation or cost segregation study where you can accelerate all those tax expenses. I'm getting into a little bit of the jargon here, but the key, in my opinion, is the massive tax advantages of real estate, right? And then last but not least, I can go and list 10 other things, but is appreciation, right? The property goes up hypothetically in value each year. Yes, it can crash. Yes, it can correct itself. But why real estate is exploding and will likely continue to appreciate, on average, it grows in value by 3 to 5% each year, which typically keeps up with inflation. But as I'm sure you know, and as I'm sure the listeners know, over 40% of our money supply in the United States was printed off since COVID. So what does that mean? That means the value of the US dollar is decreasing in value, and it has almost 95 to I believe 98% in the last 100 years. So if we can deploy that US fiat currency into cash flowing tax advantage assets that are going up in value over time, then our cash is not losing 15 to 20% of its value like it is going to, and like it's projected to. Not to mention, we're going to likely see double-digit inflation, right? So not only can you force appreciate where you can fix the property, make it worth more, but naturally, hypothetically, over time, it's going to become more valuable. And that's why I believe real estate should be a part of everyone's portfolio at some time. And when I say at some time, most people that are in their 20s or their 30s, like I truly do believe 99.9% of those people need to put all their time, all their energy, all their money back into themselves through mentors, masterminds, going to events, getting coaches, putting that into their business to get an office, to grow their team, into marketing. Because hypothetically on paper, that's going to make them more income. That's going to make them more fulfilled and not create distractions. But eventually you got to get that income to roll into cash flowing, tax deferred and or tax advantage assets that appreciate over time, which is real estate. So a little bit of a long-winded answer, but that is why I'm really passionate about and why the data, in my opinion, shows that you got to have some real estate in your portfolio.
So tell us, like, what's the basically, let's say I have money and now I want to reinvest in real estate. What is the like 1, 2, 3? What's the different things that you can do with it? First one, I should go to somebody like you and just like lend the money and say, okay, do whatever. I don't know what to do. It's like, what do you do if you want to do it?
Yeah, if you want to, let's touch briefly on if you want to actively do it. How I got started is I did what's called the house hack model, where I purchased a duplex property here in Columbus, Ohio. I used the down payment assistance program. So I literally got the down payment for free through the lender because I was a first-time home buyer. Or you can get loan products putting a little as 3% or even 3.5% down, which most people are aware of. But hypothetically, you go buy, in a perfect world, you buy a 2 to 4 unit property where you put as little money down, right? Or you use a down payment assistance program. You live in one side of the property and you rent out the other property units, right? The other side I rented out, and I had a roommate come live with me. I had 3 bedrooms, 2 baths. So the tenants were paying me like $1,500 of rent. My buddy was paying me like $500, and my taxes, my insurance, my mortgage payment, everything included was right around $2,000. And I lived in a $300,000 asset property, right? That was going up in value each year. And so I was not only living for free, worst case scenario, I would have been living for, $500, right? But also where things get really lucrative now is, hey, maybe you just live in one side, rent it out to somebody else, and then you save up money, or you go get access to 0%, credit or capital for your business, and you go put that as a down payment on the second property, the third property, the fourth property. And then eventually over time, another main reason why I love real estate is then you can refinance with a bank, tap into the equity that you've built and the property's worth more. Now that's a down payment and tax-free money that you can deploy into the next property. Now the second option, which I believe was your question, is, okay, if I'm sitting on, $25, $50, $100,000, what do I do with it? How do I actually invest with somebody? There's really 2 ways to invest, or a blend of both. Number one, you say, hey, Tyler, here's $50,000, and you and I would sign, specific legal documents where I'm deploying that money into one property or multiple properties. We have an agreement on what's called a debt return, right? I'm paying you out a specific percent that I'm promising to pay you, right? And it's a real asset. So if I steal your money or you never hear from me again or the deal goes sideways, at least there's an asset in place. If I screw up the deal, which, thankfully I've never done that, and I've paid back hundreds of our investors exactly what I said I was going to pay them, you're getting that debt return. So if someone says, hey, here's $50,000, I'll pay them back, 59 or, whatever that percentage is based on that investment. And that's passive income that you earned. Or you can invest into somebody's deal and you do like a profit share. If you sell the property, hey, we're going to split the profits. Or you can even do what's called a syndication where you're getting equity in the deal. Let's say, which is where we're at right now. We're starting to scale in these much larger development deals, building 100+ unit apartment complexes where I need to go put 20, 25% down, but we're talking about 20, 30, 40, $50 million that I'm doing on these projects. And sure, I could go put the 20, 25% down myself, but instead I would rather go raise that money from people like you, give you equity in that deal. So now I can have 1, 2, 3, 4 massive projects going on. And now you have equity, tax advantages. You're getting rent checks coming in every month or every quarter, and you can focus on your business. You can focus on making that extra $50,000 that year to invest into the next one, into the next one, right? And you literally own that real estate alongside people. So again, there's two ways or a blend of them where you're getting paid a preferred return. You invest X amount of money, you're getting paid out X amount of money back plus interest in a certain amount of time or per project. And then secondly is a blend of both where you're getting rent checks coming in, but you actually own the property with somebody. You get the tax advantages. You literally own the real estate with that person, but you have to trust them. You have to make sure that they're credible and you know that they're actually going to fulfill on that project.
That is so cool. Well, that is much more clear. I guess now, we're going to understand that those who are not in real estate and once you get in. Thank you for your answer. And how, I want to touch on still on crypto as we don't have that much time, because I know your vision is to build hedge funds that manage, crypto and real estate. How did you get into crypto? And like, what is your thoughts on that?
Yeah. So, kind of coming back to the data of let's understand financial literacy. Let's understand money and fiat currency. Since the history of time of governments, of empires that have been, like the Roman Empire and all these powerful countries like the United States, the history books show us and the data shows us that every fiat currency crashes over time. And why is that? It's simple supply and demand economics, right? If you continue, let's say there's only 1 million people in the world and Apple, they go and make 1 million phones, right? And everyone has a phone, right? And then they go make 1 million more phones and there's only an increase in population by 100,000 people. Well, the more supply of anything, whether it's a pack of gum, a phone, or a dollar bill, the more supply and the equal or lesser demand, the value of that or the price of that goes down over time, right? The reasoning why we're seeing houses be extremely quote unquote inflated or worth way more and people are bidding like crazy because there's low supply and high demand, right? It's the same thing for any other object or any other service or product or currency, right? So why is crypto coming in and disrupting that? Because you're removing the middleman, you're removing the bank that's printing off money, you're removing that government and the feds in this example for the United States that can just print off whatever money they want, right? Whenever they want. So whenever you print off over 40% of your money supply, right? And in 12 months, well, guess what? There's going to be a lot of money sitting on the sidelines, what's getting deployed into assets like the stock market, like real estate, and now into cryptocurrency. And that results in inflation. So number one, in my personal opinion, everyone should consider, this is not financial advice, I should consider 5 to 10% of their liquid net worth to be deployed, in my personal opinion, into Bitcoin, because it's the only asset that is truly fixed. You can go buy you can go buy land and build more houses. You can knock down a 10 unit building and go build a 100 unit, right? You can go mine more gold, right? They could hit a gold mine today and there's more gold, right? The point I'm getting at is whenever there's inflation, whenever there's money supply being printed, you have to hedge that, right? And what's going to be really cool is not only removing the middleman with banks, with title companies, with all these massive industries, but also what's going to be cool is how that can integrate into other asset classes like real estate and NFTs. And with crypto, I think it's the biggest, wealth transfer that we'll ever see. And I think that we're in, to use an analogy here of baseball, I think we're like literally in the third inning of what crypto and blockchain and NFTs and that whole space. I think we're nowhere near where we're going to be in the next decade.
Yeah, there is a couple countries that already accepted Bitcoin, like Venezuela, that are official cryptocurrency, but also many countries are moving towards that, creating their own, like China and other things. But more, like you said, for real estate, there are tokenization projects where they tokenize the buildings and you can own. So what it solves the problem is the ownership, because with the land and normal like documents, things get lost and fixed and whatever. People create all kind of things. But on the blockchain and through crypto and like non-fungible tokens, you can own a piece of a, let's say, I don't know, apartment in a real estate building, and it's yours. Everybody knows it's yours until you transfer that token.
Yeah, you hit a great.
That's amazing.
I mean,
it solves the problems. It solves a huge problems.
Yeah, and for people that have no idea how this will get integrated, I'll give a prime example here. Like, no joke, I literally just closed on a property before we hopped on this podcast, right? And I closed on a couple other properties last week. And prime example, I was selling a property, right? And the three previous sellers, I'm talking there was already 3 transactions. And for some crazy reason, they were trying to state that there was a lien on the property, a judgment on the property. In other words, I, Tyler Bossetti, and or my entity owes money to somebody, whether it's the city, whether it's taxes. And it wasn't the case. It was actually an issue from 3 other sellers, and it was never caught in the 3 other transactions, right? So blockchain technology in particular is going to immediately identify that this person or entity owes the mortgage company money, they owe insurance, they owe taxes, or there was a fine or a fee that wasn't paid. And that would have been caught hypothetically. My assumption would be in a day, worst case scenario, if not in a couple of hours or in a couple of minutes, right? Yes. Instead, it was caught of the day of closing. So what happened, we had to go through, call the city, get all this paperwork together, send everything over. And then we closed on the property and the funds weren't dispersed in time. So I had over $70,000 expected to come into my account because of the holiday time, because of all of this, nonsense that we had to go through on the last day, which we had 30 days, right? I didn't get my funds until 7 days later, right? And so blockchain accelerates all that, which I'm sure you're aware of, but that's like a true example, in my opinion. Not to mention, if I had investors' money in that deal, it could have been through an NFT, which they would have gotten their money out quicker, or they could say, hey, I'm going to actually just sell this NFT. I've made the money I want to make. I want to sell my NFT to Viktoriia, and they can come up with whatever price they want for it, right? Or that price goes up in value as I become more valuable, as the real estate property becomes more valuable. And that's where I think it gets really fun and absolutely disruptive in every industry.
Yeah, it's digitalizing, all this paperwork that's still been going on, and there's a lot of human errors that be possible. Like, you caught the mistake on the 30 days. That's insane. I mean, that is just, keeps me always moving toward directions of tokenization, which means just digitalizing everything and make it automated. Yeah, but we don't have more time going to that today. Absolutely, we'll go into the next series, but I would love for you, Taylor, to share how our audience can find you, how they can learn more from you. And I know you have a free gift for us today. Yeah, just go ahead and share.
Yeah, really the last thing I want to leave everyone with on the audience is investing in yourself, right? Like that's the, biggest question I get all the time is, how do I get to the next level personally, professionally, financially? And it's a question I ask myself every day is like, how do I get better? How do I serve others? How do I make sure that I'm showing up powerfully? And, that's putting in the real work, right? That's putting time, energy, effort, and money back into yourself through coaches, through mentors, through reading books. Obviously, they're listening to this podcast for a reason, but data shows that if you actually deploy money into something, right, you're taking a calculated risk. And that is, proven to be, right? So invest in yourself, invest in your business, and everything will grow from there. I'm very confident of that. But as far as connecting with me, I'm on essentially every social media platform, very active on Instagram. I put out pretty consistent content on YouTube, a couple videos around mindset, around money, investing, and also active on Twitter as well. So if there's any way that you guys, have questions for me, definitely reach out to me on those social media platforms. And then we also have our website and my personal website as well, which I'm sure all the links are going to be below this video.
Yeah, absolutely. Thank you so much. I know you also have a free gift that is the webinar, and we're also going to link that. And I know is that you're going to learn and how to use other people's money, time in order to start or scale your short-term rental portfolio. So that is going to be also whatever you're watching or listening to this episode, it's probably down, just scroll it and there's going to be a link to the episode page where you click, and that will take you to the whole information and all the links that we mentioned in this episode. And I want to thank you for watching or listening and be here with us today, and just have an amazing week, and I'll see you in the next week. Bye.
Thank you, Viktoriia.
Thank you, Tyler. Bye-bye.